Hello, world. Welcome, I am your host Mr. Stag. Today we will be taking a deep dive into Realty Income Corporation, ticker symbol O. Realty Income Corporation is a real estate investment trust that invests in freestanding, single-tenant commercial properties that are subject to NNN leases. Most of the commercial clients operate retail stores providing non-discretionary goods and services at low price points. Examples of such industries include convenience stores, grocery stores, and dollar stores, which are among the most represented industries in the portfolio. Properties leased to investment-grade rated clients account for approximately 50% of total annualized rental revenue as of September 30, 2021. Most of the leases are structured as triple-net leases, which means that besides paying rent every month, the client is responsible for the property's operating expenses, taxes, maintenance and insurance. This lease structure reduces exposure to rising property operating expenses and preserves a predictable cash flow stream to pay the monthly dividend. The company is one of a few real estate investment trusts that pays dividends monthly, rather than quarterly, and has registered a trademark for the phrase the Monthly Dividend Company. Realty Income Corporation was founded in 1969 by William E. Clark and Evelyn J. Clark. Its first acquisition was a Taco Bell restaurant in early 1970. The company used cash to purchase land needed for stores that required real estate to run, and then leased the property to the stores long term. In 1994, the company became a public company via an initial public offering. In 1997, William E. Clark Jr. retired as CEO and was succeeded by Thomas A. Lewis. In 2009, Clark retired as chairman. In 2011, the company completed $1 billion in annual property acquisitions for the first time. In 2013, the company acquired American Realty Capital Trust, founded by Nicholas Schorsch, in a $3.2 billion transaction. In 2015, the company was added to the S&P 500 index and the S&P High Yield Dividend Aristocrats Index. In 2016, Realty Income surpassed $1 billion in annual rental revenue. In 2019, the company completed a sale-leaseback transaction for 12 properties of the United Kingdom supermarket chain Sainsbury's. This was the company's first purchase of property outside the United States. In 2021, the company announced its intention to acquire VEREIT. Following the closing, the companies intend to spin off most of their office properties into a new publicly traded company. Properties in their portfolio grew from 630 to 10,808 in all 50 states, Puerto Rico, the United Kingdom and Spain. Real estate assets grew from $451 million to $24 billion. Their clients grew from 23 to 650. Total number of industries in the portfolio grew from 5 to 60. Annual revenue grew from $49 million to $1.640 billion. Annualized cash dividends grew from 90 cents per share to $2.832 per share. These properties are generally freestanding buildings, not attached to any other structure, in prime locations with good access and visibility. The two primary ways they increase earnings, and resulting dividend payments, are increasing the size of the real estate portfolio and regularly increasing rent on existing leases. Today Realty Income ranks top 10 in global REITs. The company has a 15.1% compound annual total shareholder return since public listing in 1994 and a 4.3% compound annual dividend growth rate since 1994 and with 112 dividend increases. O's current stock price at the time of this video is $71.91 with a market cap of $40.69 billion. The stock is currently undervalued according to Simply Wall Street by 58.1% with a fair value price of $171.78. The company has a P/E ratio of 86.0. The company has a P/B ratio of 3.1, which is overvalued based on the industry P/B ratio of 2.1. O currently pays a dividend of 4.1% and it has payout ratio of 87%. The company has earnings per share of 0.84, a gross margin of 93.56%, a net profit margin of 26.05%, and a debt-to-equity ratio of 69.6%. Realty Income will come to provide stable monthly dividend for many years to come since the companies that lease the buildings have stable and predictable businesses. Many of the leases are for more than 15 years. Inflation translates into stronger fundamentals for tenant businesses, leading to higher rent coverage ratios. As the prices of raw materials, land, and labor increase, the value of existing portfolio increases too. Tell us what you think about the future of the Realty Income Corporation and the real estate industry in the comment section below. Mr. Stag logging off.